Natural gas prices have surged recently due to colder winter forecasts, increasing demand in Europe, Asia, and supply risks linked to geopolitical tensions, especially with Russia. Higher US LNG exports are also leaving domestic markets more sensitive to supply fluctuations, amplifying price impacts. This tight supply-demand balance is further pressured by limited new supply from key regions. G'day folks, welcome back to another update for natural gas and its ETFs. Before we go any further, make sure you hit that like and subscribe button to support the channel. So first we look at the trends. On the monthly, it's been bullish, the CCI above its moving averages and the price also breaking above its respective moving averages. Likewise on the weekly, it's above its moving average of the CCI, and it's been in this range now for a number of almost 2 years now, but it's still making some slight progress in the last few weeks. And on the daily, if I zoom out, you can see there the CCI is above its moving average, and so is the price, hitting this minor resistance at 30.96, and our major resistance up there at 31.94 to be wary of. Now, there's no divergence I can see. The CCI is tracking in line with the price. If this CCI starts falling and the price keeps rising, then I'm going to consider that a bearish divergence. But at the moment, I'm going to consider it moving in line with the price. On the intraday chart, more closely, you can see here it's making new highs. It's broken up past where we were in the last video. But notice the CCI is falling off. Now that's still moving in line with the price, so no divergence to talk of. Before we go there as well, I just want to quickly go back to the daily chart. I don't normally do Fibonacci extensions, but looking at this one in particular, if I drew a Fibonacci extension, you can see there it's actually broken up near the 200% extension level of that Fibonacci range. So I prefer to look at Fibonacci retraces more specifically, because that gives us a better idea as to where the price may come back to. You can see here it came back near the 50% level, and it's been in that range now for a number of weeks actually. So again, Fibonacci extensions are always good in hindsight, but I prefer to use more the retrace levels more effectively. And more reliably again, I prefer to use the CCI as a measure of trend and also strength in terms of where the price is moving towards. So at the moment on the daily, it's still rising, the CCI, and we may see it go higher. Now also look at the intraday chart, even if you're trading on the daily, because that gives us an idea as to the weakening of the price, particularly at the micro level. So even though it gapped up and made some new highs, we're starting to see a bit of a weakening on the CCI. You see that also on the price as well. So again, just be careful. We only trade in the direction of the higher time frame. We only go long. So you would have taken a long trade from that point there, for example, and you would have closed it out when CCI hit that moving average range on that red candle there. So you would have made a few little points there, and you would avoid going long until you see this starting to break above the moving average range of the CCI. And by that stage, we may well see it break above this resistance level. Next, looking at BOIL, it's very bearish on the monthly, no CCI for it on the monthly. On the weekly, however, we've got this bullish divergence. You can see there are higher lows on the CCI versus lower lows on the price, and that still is declining. So avoid going long until we see this significantly break to the upside. And on the daily, again, a slight bullish movement above the CCI moving averages, although the price is still falling off. So, and we've got a bullish divergence there as well. So don't go long until we see the price start moving as well. I'd like to see it break above this moving average band to be more confident on being bullish. On the intraday chart, again taking long trades only, but only on the intraday. That's broken above with a gap up, so you would have missed out on that one. That candle there would have been the opening of that break above the moving average band. But notice as well, the CCI is pulling back towards that moving average, so you would have missed that trade if you were following the rules strictly. So probably wait for it to retrace and then start moving to the upside before taking any long trades on the intraday. On the KOLD, that's not showing anything on the monthly for the CCI, but it's well above the moving average of the price chart. But you can see there it had a bit of a fall, now making some recovery on the monthly. On the weekly, we've got another bullish divergence here versus that bearish move on the price chart, and then the price bounced from there, and that's still rising ever so slightly. So just again, taking long trades only if you're trading on the, that's the weekly. If you're trading on the daily, you'd be taking long trades, and you would have been wise to take that trade there. For example, when it broke above on the daily in line with the weekly trend, you would have entered on that candle there, and you would have closed it out on that second red candle there at the near the top there. I prefer to take the close of the trade when it enters the CCI as opposed to using the moving averages of the price chart, because that gives you an early warning signal to get out of it. And then again, going long on that candle there. Let me just zoom into this one again. So you would have gone long on that candle and you would have closed it out. Yeah, you would have been out of action there. Had you closed, that would have been a loss, because that actually gapped down on the daily. So if we go to the intraday, so again at the moment taking short trades only, you would have missed that short positioning. And again, wait for it to break to the downside again to take short trades. Probably wait for a bit of a retrace and then see it fall further before taking any short trades on this one. For UNG, that's still in this moving average range, giving us a neutral signal, although the price is showing us a very bearish momentum. On the weekly, we've got another bullish divergence here. The CCI is making some move to the upside. That's a bullish divergence versus lower lows on the price, and that price hasn't yet started to take any action to the upside. So again, wait patiently for that to start moving to the upside before taking any bullish trades. On the daily, again, you wouldn't have taken this bullish trade because the weekly is not bullish, but that's gapped up, similar to the other charts. That's hit this key support at 12.57, and then it finally gapped up after that key support, which we had drawn for some time. Now, if we go to the intraday charts, taking long trades only, again, you would have missed this trade because that gapped up and you would not have got into that. So again, wait for a bit of a pullback, and then probably wait to see it break into this moving average range, and then wait for it to break out again to take any long trades, assuming the price keeps rising from here. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.